In the meantime, let's get started with the big news of the day, and that is the jobs report, which also came out a day early. Normally, we get it on the first Friday of every month, but because the market is closed tomorrow for the Independence Day holiday, we got the numbers today. And as I've been saying for a long time now, the numbers are basically meaningless because whatever the government reports is going to be revised down, not only in the months ahead, but the years ahead. So the numbers are completely unreliable, and why anybody puts any stock in them, it amazes me. But, the markets still react to them, and so I'm going to talk about it. So the expectation for the June number was 114,000 jobs, which was less than the 172,000 jobs that the government reported were created in May. The actual number of new jobs was 57,000, so way less than 114. In fact, if you look at the jobs that were expected to be created, the expectations ranged from 70,000 to 145,000. So not only was it below estimates, but it was below the lowest number in the range of estimates that went as high as 145,000. But adding insult to injury, they revised down the May number from 172,000 to 129,000. They also revised down the month before that. I forget by how much, but 2 months of downward revisions. The manufacturing numbers, last month they told us we gained 7,000 jobs. That was revised to a loss of 2,000 jobs. Although this month we did create the 3,000 jobs that they anticipated. But again, who knows if this is going to be revised down. The unemployment rate actually slipped a notch from 4.3 to 4.2. Now, you would think, oh, that's good news. There's less unemployment. Well, the reason there is less unemployment is because more than 700,000 workers left the labor force. So these workers are no longer unemployed if they're no longer attached to the labor force. In fact, the labor force participation rate now dropped all the way down to 61.5. We're nearing an all-time record low. The last time it was this low, because it did get to 61.5 in the past. So the last time it got down this low was March of 2021. And again, the reason it's so low is because 700,000 people left the labor force. Had they not left the labor force, the unemployment rate obviously would not have gone down. It probably would have gone up. But even more shocking, when you look beneath the surface, full-time jobs, this is, the household survey, full-time jobs declined by 514,000 during the month. We have the fewest number of Americans who have full-time jobs now since 2024. So that means we have fewer people with full-time jobs now than when Trump was elected. In fact, the exact number of lost full-time jobs since Trump became president the second time is 2,239,000. So full-time employment has been eviscerated.
Before we move on, notice what's happening beneath the headlines. Official job numbers may look stable at first glance, but the deeper data tells a very different story. Falling labor participation, fewer full-time jobs, and slowing manufacturing could all be warning signs that the economy isn't as strong as many believe. If you enjoy honest analysis about the U.S. economy, the Federal Reserve, inflation, gold, and global markets, don't forget to subscribe, hit the like button, and leave a comment below. Do you think the U.S. economy is stronger than the official data suggests?
This is why Trump is so unpopular, because so many people have lost their full-time jobs. And a lot of other people have just been so disgruntled by the job market that they've left the labor force entirely. And when it comes to manufacturing, so far since Trump was reelected president, up until the 3,000 manufacturing jobs that were gained today, the U.S. has lost 73,000 manufacturing jobs. So for all Trump's talk about how his tariffs are going to result in manufacturing jobs coming back to the United States. That hasn't happened. We have fewer people employed in manufacturing now than when Trump came back. So the tariffs are not bringing back the manufacturing jobs. All they're doing is increasing the price that we pay for manufactured goods. And prices are going up. Jobs are going away. This is why Donald Trump is so unpopular. Now, of course, he's going to be bragging about how great the economy is, how everything is booming. I'm sure he's going to have a lot of speeches commemorating the 250th anniversary of the United States. And he's going to point to the Dow, right? The Dow Jones hit a record high today. The Dow is above 52,000. That's probably going to be something that Trump is going to be focused on, because he keeps saying that everybody told him that 50,000 was impossible, sir. We can never do this, sir. You're only going to be president for 4 years. There's no way we can get the Dow to go to 50,000, even though that would only be about a 3% per year return. But he's going to be bragging about the Dow and claiming that this means his policies are working. But of course, he criticizes Biden for being the worst president ever and having the worst economy ever. Yet we had a very strong stock market under Biden. In fact, stronger than it's been under Trump. So clearly, the stock market is not a bellwether. If we had the worst economy under Biden and the best economy under Trump, yet the stock market goes up under both, then clearly the stock market is not a reliable indicator if Trump is being honest about how great the economy is now and how lousy it was then. And of course, Trump has to talk about how bad the economy was under Biden because he wants to take credit for turning it around. As if, had we not elected Trump, we would be having an economic disaster. And the only reason it's not an economic disaster is because we elected him instead. So he presided over this massive economic boom that he claims we're enjoying. But it's not in the labor market. The labor market is weak. The only thing that's strong is inflation. Now, after we got the jobs numbers today, the expectations for a September rate hike immediately went down because now the labor market is clearly a lot weaker than some people had thought. And so that takes away some of the ability or impetus for the Fed to actually follow through on its tough talk and hike interest rates in September and then maybe again, or before the end of the year. But as I've been saying, I don't think the Fed is going to be able to deliver on the rate hikes that have already been built in to market expectations. At least the precious metals market, the foreign exchange markets, they expect the Fed to hike. But I don't know that the Fed is going to be able to hike. In fact, I think one of the reasons that the Fed has raised expectations for a hike is so when it doesn't hike, that's an ease. So it won't actually have to cut rates initially. It just has to not hike them. But also, I think the Fed is trying to create an appearance of independence. Because after all,
this is where the conversation becomes especially important for investors. If the Federal Reserve eventually chooses easier monetary policy instead of keeping rates higher for longer, the effects could extend far beyond Wall Street. It could influence inflation expectations, the US dollar, bond markets, and even investor demand for gold and other hard assets.
Everybody believed initially that Trump was going to put, a puppet at the Fed. Because the reason that Trump didn't want to reappoint Powell was because Powell wasn't doing what he wanted. Trump wanted Powell to cut rates, and Powell wasn't playing ball. And so he wanted to put somebody in there who would. But the markets were very scared about that. The dollar was falling, gold was rising, because the Fed's independence was under question, and Trump was in a box. How do I repair the damage? Well, I think they put on a show with Kevin Walsh and say, hey, let's put this guy in as the Fed chair who's a hawk. And he's going to talk about how tough he's going to be and how he's going to raise rates. And so when he ends up not raising rates or cutting rates, it won't look like, you're controlling it, even though that's the plan they've got all along. Because I don't believe Trump would have given Warsh the job if he expected him to be another Paul Volcker. That's the last thing he wants, because that's worse in his mind than what we had with Powell. And Powell's a moron, Powell's an idiot, too late, Powell. He's going to actually appoint somebody that's going to be even later, that's even a bigger idiot than Powell, because according to him, the reason Powell was so dumb is because he wasn't cutting rates. Well, neither is Warsh, at least for now. So by the time he gets around to cutting rates, it won't look as political. It'll be like, hey, this is actually the independent assessment of the Fed. It's not because of pressure from the White House or Trump, right? Because, he's a very independent guy. He's a hawk. And the fact that he's cutting rates must mean that these rate cuts are appropriate, right? It's an independent decision, but they're not going to be appropriate. In fact, rates are still too low. The Fed should have hiked rates at their last meeting, and 25 basis points isn't even enough. If Warsh were really serious, he would have already done something. He wouldn't have set up 5 task forces to basically bide him some time while he does nothing. Meanwhile, look at money supply growth is really accelerating. Look at M2. Look at the Fed's balance sheet. The Fed is creating inflation. It's trying to distract the markets by pretending it's going to get tough and fight inflation. But in the meantime, it is creating inflation. And I think the metals markets are going to start to appreciate this. In fact, gold, which did make a new low intra-week, it got below 4,000 again a couple of times. It had a nice rally today in response to the weak jobs market. We closed the week above 4,000, in fact, above 4,100, 4,118.50. So a nice turnaround, about an $88 rally in the price of gold. I really think 4,000 is the support. In fact, we may not trade below 4,000 again. We'll see. We traded below it a couple of times, but this was very bullish news because it does push those rate hikes further into the future if they ever occur at all. And I would be surprised if we ultimately get them. Again, I think we're setting up for cuts and a ramp up in QE. Silver, the same thing. It made new lows, but it closed back above 60. $1.74 gain on the day at $60.72. So I think we're going to see some continued strength in the metals as people start to appreciate the fact that the Fed is all talk, that they're not going to be able to walk the walk when it comes to inflation fighting because the economy is too fragile. The job market is fragile. The bond market, the housing market is a disaster just right before our eyes. And so the Fed is going to be under all sorts of political pressure, especially as we're coming closer to the midterm elections. Trump is trying to do what he can to control the damage. He's got
One key lesson from this discussion is that markets often react to expectations before they react to official policy changes. Whether you're following interest rates, inflation, or precious metals, understanding long-term economic trends is often more valuable than focusing only on today's headlines.
The ceasefire from the MOU with Iran that really doesn't end the war. They're trying to bide some time. They're trying to get the oil price down by reopening the strait. But oil prices are not going to stay down. As I said, right now we're back below $70, but they're not going to stay there. This is just some short-term noise, relief. The longs are getting out of the market. And I think that you're going to see a big bounce in oil prices as we move forward. You have record low inventories around the world. Strategic reserves have been run dry. I think Trump said that we were maybe 3 or 4 weeks away from being tapped out ourselves. So there's a lot of demand coming. Plus, there's going to be a risk premium built into the oil market. Nobody has any idea now what's going to happen. Even Trump keeps saying that, the bombs could be dropping at any minute. This MOU is really not real. We're just trying to keep oil prices down for a while, right? I mean, basically telling Iran not even to trust us, that we're not even serious. This is all politics. We're just trying to keep oil prices down for the summer driving season. So there's going to be all sorts of political pressure on the Fed not to hike rates and tremendous pressure to cut. Now, I spent a lot of time on last week's podcast, which, by the way, on my YouTube channel, we got over 220,000 views, most viewed regular podcast that I've ever done. So a lot of people take Bitcoin, strategy, stretch. And so what happened following that podcast, instead of the death spiral accelerating on Monday, Michael Saylor found a way to temporarily stop the bleeding by pretty much doing exactly what I said he was going to have to do. And that was start selling Bitcoin, which is what he's going to do. Now, he hasn't sold any yet. What he did do is not buy any. A lot of people thought he was going to be buying Bitcoin over the weekend under 60,000. He did not do that. Instead, he sold more strategy common stock at a discount and raised the cash that he has available to pay his commitments in, mainly for now, in dividends on the preferred. And on stretch, he raised the dividend from 11.5% to 12%. So this increases the amount of cash that strategy needs to meet the obligations on the preferred. So they raised more cash, but what he did is he established what he called a Bitcoin monetization fund, which I thought was a bit ironic because he thinks Bitcoin is money. But this is an acknowledgement that it's not money because he needs to monetize it first. He has to turn his Bitcoin into money by selling it. And there are three reasons now that strategy is going to be selling Bitcoin. One is to raise more money for its dollar reserve. And by the way, they now have established a minimum dollar reserve. And so when the dollar reserve falls below this minimum, I forget what the threshold is, but now they have to bring it up. How are they going to bring it up? They're going to sell Bitcoin in order to maintain the dollar reserve. And it's going to keep depleting if they have to keep on jacking up the dividends.